In this video, I want to show you the three setups that I use the most. This is what I use every day, and these setups have worked for decades, since forever really, since there is charting, and there's no reason to think this will not work in the future. So as long as the market is trending up, I have plenty of opportunities every week to trade. So the three setups are the bases, the continuation setups, and the news gaps. So what are bases? Bases are periods of time when price goes sideways. It could be anything from 3 months to up to a couple of years, but typically it's going to be 3 to, let's say, 12 months. Price will move inside a range, and that range should contract over time, like you see here. You have a series of lower highs and then you have higher lows. It could also contract, making several waves of contraction, like pullbacks that you see here. And the goal is to buy the stock when it breaks out from the tightest part of that range. In this case, is right here. So in order to do this, I need to see a very tight area. So a few things about bases. I want to see waves of volatility contraction, like here. You see, this is one wave, this is another wave, this is another wave, and another wave, and so each wave is smaller than the previous one until it reaches a point where you have a very tight range. In general, I want to see a rounded bottom. A rounded bottom is really when price moves, making lower highs and then goes sideways and then starts to make higher lows. So it's basically the price is turning around from going down to going sideways and then going up again. And I want to see some sort of resistance. It could be horizontal, like here. It could be a descending resistance, like this one. And I want to see the handle be as close as possible to that resistance area. It's also important strong rallies within the base before the breakout, like here. So that indicates that price is gaining momentum in my direction. So sometimes bases will form against a 50-day moving average, like here. So these are more like pauses or large pauses in the uptrend. Okay, so you have the same concept, volatility contraction waves, and you have higher lows, and you have a very tight range price has to break out from. The concept is the same. So I'm going to buy, in this example, in this day. Here's another example of a base. This is Tesla in 2025. So as you can see here, the volatility contraction waves are not as clear as with the other example, but you have one wave, you have another wave, you have another wave here. So what happened here is you have your descending resistance here. So this was a potential area of breakout. Then it pulled back again and put another small setup before finally breaking out. So I consider this to be an extension of the base, but the base is still all this. And as you can see, you have a horizontal resistance here as well. So the final handle, which is this tight range, set up very close to this horizontal resistance before breaking out. Okay, let's see another example here. The base here is more elongated, and the contraction waves, you have one here, another one here, this one is bigger. So it's almost as if you had one setup here or base and then broke down, and then you had another wave here, and then finally the handle is here. So same idea. You have sideways action and then higher lows until it reaches a point where the range contracts very, very much, like never before in the wave, in the base, and then it breaks out here. So what are continuation setups? Continuation setups are small pauses or breaks a stock will make as it trends up. Like this stock here, it's trending up for several months, and it took a few breaks, like here and then here, another break here, So what I want to see is the stock moving up with strength and then pulling back to the moving averages and put a very tight, narrow range like here. So the stock is going to move up, pull back to one of the moving averages, could be the 10 and 20 or the 20 moving average. It doesn't really matter which one. What matters is that I see some respect of the moving averages. Like it could bounce off the moving average and then continue, or it's going to move sideways and respect the moving averages along the way. Like you can see here how it bounced off the 10 and then closes above the 10-day and then closes above 10-day, bounces off the 20-day. I want to see this, like the stock moving inside a range and that range contracting over days or weeks. And I want to see higher lows. So that means that the buying pressure shows up higher and higher each time. And then I want to see some sort of resistance, which could be a horizontal or a declining resistance. Like in this case, you can see some sort of horizontal resistance over this area, but it's also a descending resistance. So the more resistance, more clearly defined resistance you see, the better. And then the day the stock breaks out from this tight range, the tight range could be 1, 2, 3 small candles or candles with small bodies. I want to see very, very high volume, like in this day here. The volume has to be bigger than the previous day volume. If I don't see high volume, the higher the better. It's very hard for the stock to have follow through in coming days. Let's see another example here with Tesla. Price moved up here, pulled back to the 10-day, and the range the price moved in contracted over time. So we have this horizontal resistance over here. We have a bit of a descending resistance here, and we have higher lows. Higher lows actually go all the way to this very tight range. So a potential entry was this day over here, and then this day over here. This one actually worked better. The problem with this day is it didn't have much volume. This day here had above average volume, and it had the volume this day was bigger than the previous day's volume. So the third type of trades are news gaps. News gaps happen when price gaps up with very important news and very big volume. It could be something like the company winning big contracts, or disclosing a new tech, or launching a new product or a new service. It has to be something important, or it could be after an earnings report where the company is presenting earnings or revenue that is much higher than it was estimated before. It could also happen that the company changes its guidance for the future revenue, and they are expecting for it to be much higher than previously estimated. So what I want to see is very big volume at the open, in the first minutes after the open. It could be 20, 25, 30% the average daily volume. And in this case, I'm going to buy after the price puts a range at the open, and I'm going to buy when it breaks out from that range. I'll make another video explaining all the details. And the same as breakout, you want to see very high volume for potential follow through. So otherwise, it will most likely fail and pull back. So sometimes news gaps are going to go sideways to meet the 10-day moving average like here, and then it provides with another opportunity to buy, just like with setups. So it's going to set up against the 10-day moving average and then break out from that quick setup. All right, that's it. For this video, I just wanted to show the 3 setups or types of trades that I use the most every day. And I'll try to make more detailed videos about each one of these in the future. Thanks for watching.